Good afternoon, guys. We're going to go over our Forex trades for today, Thursday, April 23rd. We had two trades finished down 12.4 pips. We'll go over them in a minute. First, just want to touch base on this morning's economic data. Let's see. We had initial jobless claims that came in higher than expected, so more jobless applicants. So that was another negative announcement for the economy. Then following that was the U.S. manufacturing PMI, which came in below estimates. Again, another negative for the economy, manufacturing. It's not a surprise there, though. And then the big number for this morning at 10 o'clock came out. New home sales absolutely plunged for the month of March, down 11.4%. Now, what was it? Yesterday, day before, existing home sales exploded higher in the month of March, right? And like we said in the video, over 90% of the economic data that's come out for the month of March has missed forecast and being blamed on bad weather. All of a sudden, existing home sales, whatever it was yesterday, day before, come out, blow estimates away. What happened to the bad weather? Bad weather did not affect existing home sales. Today, they announced new home sales plunge 11.4% for the month of March. What do they blame? Bad weather. So I got to get this straight in my head. It sounds like the government wants me to believe bad weather affects new homes and almost every other economic aspect, GDP, manufacturing, you name it, jobless claims. But existing homes, it doesn't affect. So existing homes have a bubble around the home, sunshine, nice. So you drive through all the bad weather, I guess, maybe they want you to believe, and then you go in the bubble, and then you see the house, and the house is all nice because it's in a bubble of good weather. I can't get it through my brain, and I can't stress it enough that the economy is so weak, and the government is trying to do anything and blame anything to take your eyes and your mind off the bad economy. And it's simply, it's not working on me. It's obviously, in our opinion, the government looks very foolish. And whoever's putting together these numbers, it's a complete joke. So anyway, so let's get to our two trades. One of them we had 50% of normal size, and the other we had 30% of normal size. Why? Because the one with 50% we're risking less than the one with the 30%. The one with the 30% was the one that hit us and hit us more than we made on the 50%. But those things happen. So we lost 12.4 pips. So first trade you're looking at here is Euro Pound. We were long this 0. These were both last night. This one we got out during the night. We came in the office around 6:30 or so, and we were already out of it. The second trade we were still in, and then the new home sales hurt it. So we'll go over that one in a second. But this one here, the Euro Pound, we were long 0.71315. Only went against us by about 10 pips or so. And then overnight, while we were not watching it, we had our price target originally higher than 71.50. It was around 71.65, 71.70. But we lowered it. We lowered it down to 71.50 while we were not watching. While we were sleeping. You got the half figure there. That's a psychological level. It can sometimes hem and haw over that, which it kind of did for about an hour. It went through. It came back down. Kind of went back and forth between about 45 and 53 for another half hour, and then finally started to go. But anyway, so we were out. So we picked up 18.5 pips. We had half our normal size, so that came out to about 9.2 pips. This was the one that hurt us, the U.S. dollar, Canadian dollar. We were long this 1.22520. Our target was up here close to the figure of 1.23, right around 1.2290 or so. Obviously, never even approached that. At one point, maybe we were up about 10 or 12 pips here while we were not in the office. But we originally were 90. We lowered it down to about 75. Never even approached that. The highest it got was about 66. So I don't feel too bad about that. Come in early this morning, and it was down against us. there was some economic news here, 8:30, kind of came down, pulled back, was hanging around, and then first the news broke that United States drones in an airstrike a few months ago killed a U.S. citizen and an Italian citizen that were held hostage. That started the slide in the U.S. dollar. Thought it would be just a small little move, but that news broke literally 6 or 8 minutes prior to the new home sales. Once the new home sales came out, it just really hurt the dollar, and the dollar sold off. Stopped us out. That's where our stop was, 1.21799. Lost 72.1 pips. Adjusted for size, 30% of our normal size, to 21.6 pips. So not the worst thing in the world, not the best thing in the world either, obviously. But you can see what it has done since. It's come in even further. This was our stop area. You got these, it coincides with these bottoms back here from a few days ago. So it was a good spot to get out if you were long it. If you're still long it, could possibly reverse. U.S. dollars just wasn't looking too good there. With that new housing sales. So that's it. We're going to wrap it up. We do have one position right now, which we're open in, is a pound to U.S. dollar, which we're short. Pretty much flat on that position right now. And we'll see what that does the rest of the day. If any signals come out, they'll be coming your way. If you're trading now, good luck. And we'll be back tomorrow, assuming we get some action. Have a great rest of your day.